and with traffic, etc. So I appreciate you all being on time. This group of people who are on the calls are either board members, community members of condominium associations within Washington State, mostly some in downtown Seattle and some out in Redmond and other parts of this greater Seattle, King County area. So I think Steve may have sent your team, yourself, some presentation materials, some questions, or some information about us and who we are. So hopefully that's really the dialogue and discussion we wanted to have this evening, and kind of get your perspective of the questions that we propose in Steve's presentation from that. And anyone else? Steve, did you want to jump in or anything else?
No, I think that's why we're here. There's a lot of people from we've talked with folks from Seattle, where we are, to all the way to Spokane and up north and down south in the state. Lots and lots of condos. We have, if you would believe it, over 2,300 condominiums in King County alone, and about 100,000 units in King County. That's the easiest place for us to get statistics. And so a hot topic, lots and lots of insurance. We're required by law to actually have a lot of insurance. And so that's one of the concerns, is how insurance costs have gone up dramatically. Also, how the state's requiring us to actually maintain insurance, how the state law requires us to pay for any loss that exceeds the master insurance policy deductible, regardless of whether it was malicious or not. If a unit owner caused it, all of the owners essentially have to co-insure each other, which I think is very unique in the insurance world. Typically, there's a liability on a party that causes a loss up to the limits of what you can get out of them. But that's not how it works. All of us insure each other, and there's a lot of those different things, challenges with all of that, and probably more. So yeah, right. we would love to. We're looking to hear more about what possibly how OIC could help support us in making some changes to what's required, to how things work, to make it better, to make it more affordable, more reasonable, practical, all of that.
Right, because most of us, various condos, like the condo I live in, we pay over close to $400,000 a year for insurance. Others pay probably more or less, but and every year it goes up. And then individually, we have to have our HO6, and then some people have had some incidences where the insurance companies have dropped them. So to Steve's point, it is getting very unaffordable, because condominiums hopefully were supposed to be affordable housing, but it's getting to be very unaffordable these days.
Well, I appreciate what you're saying. I live in a condominium, so then there's that. So I am aware of these issues. I also chaired the housing committee in the Senate, where from my work there, of some of the challenges that condominiums have in general. But I honestly cannot see who from my team is on this call, other than Charles, I see, but David Fort, I thought, was going to be on and to help address some of these questions.
Commissioner, David was unexpectedly out of the office this week, but Rory is on the call with us, and as is Tanya. Tanya Lavoie is the commissioner's deputy for public affairs. She's on the call also.
She was also my former legislative assistant and was quite actively engaged during session, and especially on the housing committee in terms of knowing those issues and that sort of thing. So Rory is also in the same unit as David Fort. So Rory, are you on?
Yeah, Commissioner. Hi, I'm here.
Oh, there you are.
Okay. Yeah, I know I'm unfamiliar with the Google setup as well, and I'll just raise my hand and say I'm a condo dweller and a condo board member here in Seattle as well. So certainly personally understand your concerns. And Steve, in David's absence, I'm not sure I saw some of the initial questions, but you've outlined some of your concerns, and I think we've previously engaged with OIC staff about the cost of these master policies going, way up. And I'm wondering sort of what you're hearing from your brokers, or where, along those lines. And then I think you've also previously raised sort of interest in, talking about standards set out in Title 69 or RCW 69, or 6490, rather. And so are those still sort of things you're considering in your legislative advocacy? Would love to hear a bit more about sort of, the legislative arena is sort of my sandbox, if you will, but in that space, as well as any sort of specific, asks of the commissioner, in terms of OIC rulemaking or existing OIC authority that you're homing in on.
Sure. I would just offer, I think there's two different things on the rulemaking side, because you folks aren't directly involved in legislating 6490, for example. That's not an insurance statute, but it is obviously directly tied to insurance. I think you would have the power to potentially do rulemaking that says, and this is a pertinent example to my building and many others, we outsource our management, right? You, as condo dwellers, you probably know about, you have a management company because you're a board member. Lots of us are board members. We have a job, we have other things, but we're asked to be board members, but we're not executives in the sense of executives at every company that have people that are the functional work body, right? We are the work. We want a lot of the work done. We outsource it, but we also insource a lot of it because it's just hard. We don't have that big team. One of the things that happens is there's a loss. All of the management companies, or most of them, offer some sort of loss management services, charging between $150 and $200 an hour in this area in the western half of the state to provide that. Interestingly enough, almost every single insurer in their policy explicitly excludes anybody other than the people actually performing the work to oversee the work. They will not pay for it. So they will not pay or reimburse us when our management company charges us $150 to $200 an hour to help manage the losses. And these are losses, of course, across multiple units, oftentimes with water losses. And so they're complex losses. It's not just, oh, Steve, your unit got damaged, deal with it yourself. By law, again, look at 6490, 6434, look at the statutes. The association is required by law to restore and replace all the damage within the units and also in the common elements. So it's really, we're in a pickle, right? Because we can't just say, oh, well, Rory, you had a loss in your unit. That's not our problem. It actually, by law, it is our problem. And so somebody needs to help manage that work. And if we're going to hire a contractor, we then need someone to oversee I mean, we all know how it works. You don't just hire somebody and they manage themselves. And so the problem, I think, from a rulemaking stance, I think what could be done is potentially a rule that says, oh, insurers, you can't exclude an association or maybe some other insured party from using a third party to help reasonably oversee, provide a reasonable level of service to make sure that the loss gets restored. Because if we're requiring you to make sure that it gets restored, you have to be able to do that. And you shouldn't just be able to say, well, all of your management company charges or third party, whoever's helping to oversee the loss that's not the contractor, we won't pay you for that. So I think that's a rulemaking thing that you could consider. I think on the other side of the coin, there's the requirements on how much insurance we carry. This goes right back up to Fannie and Freddie sort of policies. But again, the state doesn't have to require us to meet Fannie and Freddie requirements. Fannie and Freddie has their own blacklist and things. I think we've heard a lot from folks on this call, some of whom are here. I see Rich, that condos and HOAs should have the ability to self-govern. And I think there is a lot of that that's sort of baked into the law. And if a certain condo has units that are all well above the maximum that Fannie and Freddie underwrite anyway, maybe those owners don't care if they can be underwritten by Fannie and Freddie. Maybe if you have a super majority of the owners, maybe it's even more than 67%, you can opt to have less than 80% coverage because it has gotten so exorbitantly expensive, and the owners decide that that's the best thing for the owners. Again, it's not an apartment building, and you understand that because you're on the board and you're in condos. So, and I did work with you, Commissioner Kuderer. I got to speak with you once or twice on a couple of bills that passed a few years ago, and so I appreciate your experience on that. I think there's other things, again, back to If I cause a loss, even if right now, if I go and I want to hang something off of this sprinkler head in my room here, and I tell you all in the call I'm going to do it, I'm going to cause a loss, by law, the rest of my association is responsible. It could be $1 million loss. My loss is capped at $50,000, and everybody else pays. The master policy either has to pay or the board has to decide to or not to file a claim and pay for it. I don't know how else, any other example in the insurance world that works like that. There should be some ability to recover a reasonable amount of money in excess, because what we end up doing is playing master policy deductible whack-a-mole, where you're like, oh gosh, the master policy is getting so expensive, but we keep having losses that exceed the deductible. Do we file a claim? Do we not? How many claims do we want to file? How much is this impacting how much our premium goes up? And it's because individual units have their toilet overflow, have a plumber out and something doesn't go well. There's a backup. People have literally hung stuff from their sprinkler heads. Why you would do this, I don't know. But all the owners collectively end up paying. And of course, in the insurance world, there is a lot of pooled risk. That's what insurance is. But this is different than that. This is literally you're pooling risk within the association by law, and we're all being forced to share this risk. But that's not really how the rest of the assessments work. We agree to all share costs for the employing people and maintaining the building regularly. But when I cause $1 million loss, everyone else somehow is responsible for it. Over the deductible of the master policy. So I think there's lots of, anyway, those I won't go on. Those are all examples that seem to be very almost perverse. And I don't understand how we got here. I don't know who it was that thought these were good laws to enact. Lots of states do actually have similar laws in terms of everybody pooling this responsibility when you exceed the master deductible, but you do end up playing whack-a-mole. And we have people on this call in other condos that have the same problems we have. We have a 200-unit condo, and there's unit owners. Half the units are rented, and there's lots of losses. And there would be less if they were less rented. But then, we're talking about housing affordability, and we have all these restrictions. You all get it. So it just feels like we're really stuck. Condos, especially HOAs, not to the same extent, but we're stuck between a legislative rock and a hard place. And it doesn't really seem like the policies and the rulemaking and the lawmaking has really considered what we have to do, the balance between HO6 policies and the master policy, how that works, how that nets out, all of it.
Well, Steve, first of all, I see these as two separate issues in terms of the approach. As a former legislator, what you were talking about with requiring the insurer to cover the project management fees, that to me feels like it's mandating coverage, right? That they have to pay for that. And that is something that would require a legislative fix. That's my 2 cents on that, just given what you just said and the reaction I had as I was listening to you. I was thinking this is a bill, right? It's certainly, and we don't, as an OIC, we don't take positions on, for the most part, on coverage mandate. I think we've only done that one time, and it might have been on hearing aids, I think, mandating coverage for that. But I certainly have dropped bills to mandate coverage in the past, in healthcare in particular. And I think it's something, I've heard that here in my own condominium where people, well, I've heard 2 things. One, they didn't get their project management fees back when they had a loss. But they also, another one decided, because that was happening, decided to go without having, the property management company be that person, and instead relied on the contractor. And the property management company charged that homeowner anyway for those fees. So then there's that. That's another issue dealing with property management companies, and I've got my own thoughts on that. But I think that, and I know that there are legislators who would be interested in that kind of legislation or dropping a bill like that, because I think that is an issue. If there's an expectation that there's going to be a project manager, especially when it's a multi-unit situation. I managed my own when it was just my unit, and thankfully it was just my unit, right? But I had a contractor that was approved by the HOA board already, so I didn't have to worry about that too, right? So it all worked out for me in the end, thankfully. But it doesn't for everybody. And you're absolutely right. I mean, when I was, still a senator, I knocked on some doors in a condominium complex. It was a smaller one, mid-size, probably 30 units total. And there was a woman telling me that she just, was $100,000 assessment, and it was more than the value of her condo. And she's like, I can't do this, right? And so that led me to start thinking about where are there, almost like a program, an interest-free grant, not a grant, but an interest-free loan program for especially older condominiums to retrofit and to maintain especially more serious issues so that they can maintain their insurability and keep the costs down, right? I mean, once you start getting older, they start ratcheting up the cost pretty dramatically. And of course, the size also makes a difference. In terms of the coverage and the master policy and how that works with the HO6, can I ask you if Wekiwa impacted that at all?
It was already this way. The case law was understood. This was actually, there's a very famous attorney who kind of figured all this out about 15 years ago. And the understanding has been since around that time, 10 or 15, 20 years ago, that associations have the right to assess an owner up to the deductible, but no more than the deductible. So what Wekiwa did was simply take out any ambiguity in that, but didn't change it. 6434 has been understood, has been written to work that way for quite a long time, and 6434, is
Okay.
3 decades old. So
I was just wondering, because there are some provisions within Wekiwa that are not going into effect until 2028, I think. So I didn't know if that was going to be impacted at all by Wekiwa. Okay, because at that point, I think all buildings fall under Wekiwa.
yes, and what Wekiwa will do, which wasn't true for some, especially older condos under the Horizontal Regimes Act, 6432, the language isn't in there that you have to insure all the units. Well, now it is. You do need, so that's a major, actually, that's the sea change. If I was to call out one in the insurance section of Wekiwa, is that you are responsible for the units and the habitability and restoring the units. That language doesn't exist in 6432.
And it says that it's the HOA board's responsibility?
The association. Yep. So
Each individual unit, because that's not how I read that, but I may have to. That was a Senator Peterson bill, and that came through Law and Justice. That did not come through the Housing Committee, if you remember.
yeah, yes, but it's also in 6434. If you look at, and it's been this way for a long time. The association is responsible for insuring the units, so that hasn't changed. But in 6432, 6434 was never retroactively applicable. So these really old condos. So there are folks on this call who are 6432 condos, and they will now be subject to. So I would say none of the problems that we've discussed are corrected by Wekiwa.
Okay.
If anything, they're exacerbated by Wekiwa.
Okay. So what would be helpful is if you could send, sort of an explanation email about the interplay between the master policy and the HO6. I don't serve on the board here on at my condominium complex. And so I haven't been, in fact, I've missed a lot of meetings, probably bad on me, right? But I have a really good neighbor who fills me in. But I do think it's important to kind of get the overview of what's the interplay, because we are very acutely aware of the increase in homeowners insurance, and by extension, the master policy increases and the HO6 increases as well, renters as well, and the non-renewals that we're seeing by some insurers around the state. For condos, it seems to be a little different in terms of when there's a non-renewal. It seems to be more maintenance of building issue and flat roof, which they pretty much all have. So I think it's something that we need to be more actively talking about to see what we can do to fix this problem. Because I agree with you. I mean, people need to be able to afford insurance. I mean, affordability and accessibility are intertwined, right? But it doesn't do us any good if people can't afford the insurance and they're required to have it. It just puts people in a bind. So I'm willing to engage more on this. But in terms of what ends up being through rulemaking and legislating, I'm going to leave that up to policy because they're going to know better. But off the cuff, I'm thinking that first issue you talked about is definitely legislative. And there are others. Senator Wellman was going through something very similar. I mean, her daughter was, and she is acutely aware of issues with condominium assessments, condominium insurance increases, condominium insurance claims, and she would have a receptive ear to this. I'm quite certain of it. So I think we have people we can talk to about this, but I think it would be helpful to have a list of all the issues and sort of an explanation from your perspective on what are the pressure points and what's the the interplay. This fact that you said you can only assess up to the master policy deductible, right?
Yeah.
And then everything above that is, I mean,
Paid out of pocket or a claim.
Yeah. Yeah.
Yep. Co-insured is the way is what I'm calling it, because that's exactly what it is. You're co-insuring my loss, which I don't think would ever happen if I ran my car into yours. My limits of liability would not be capped at any kind of master deductible. It would be whatever you and your insurer could get out of me. And the interesting thing is that we all carry the other bizarre thing, which I don't know that there's anything wrong with it, but depending on how the loss happens, it could be a loss assessment, it could just be individual dwelling coverage, there could potentially be a liability claim, or there also could be, and there's water and sewer backup coverage, which was this endorsement a lot of people forget to actually have, but then it's a problem when your toilet backs up because the common line got backed up. But interestingly enough, we all usually carry $100, $300 or more $1,000 worth of liability coverage. And so most of us would have policies that would support, if we caused damage, to actually pay that out. But then the insurance companies, obviously, this is, again, whether this is rulemaking or what this is, but the insurance companies say, oh no, well, that's not a liability claim. That's under loss assessment. So this is only, you're limited to doing this. There's all kinds of fights that go on between the HO6 insurers and the master policy and all that. We have to get our insurance brokers involved. And it seems like a bunch of nonsense. I mean, it seems like it could be, certainly the private companies have the right to, I guess, argue as they wish. But it seems like it should be a little bit more straightforward. If I cause a loss and a water loss to 5 other units, seems like a liability claim. Seems like, my liability insurance should cover that. And I think there do have to be limits, because if my loss liability is unlimited and it is $1 million loss, I'm not sure that's actually fair to then assess me $1 million that for coverage that the average homeowner, all this, I don't know how many of us here have $1 million of liability, maybe some people with umbrella. I don't carry it. So I do think there have to be reasonable limits for individual losses. However, I don't think the arbitrary, and I do think it's arbitrary, the arbitrary number that the board has picked through their whack-a-mole process of trying to figure out how high should we go to avoid paying claims is the right way to set the loss limit for my unit when I cause losses to my own unit or to any other unit. And that's how the law works in our state and almost every other state. And that's one of the biggest challenges that we have when we go through rate increases. And a lot of us actually have the same broker, Hub, very big broker. They do a lot of condo insurance in our markets, and claims do affect the number of claims you file do affect your rates.
Number one reason. Yep.
Yeah, and we're not in charge of it. It's individual units having losses time after time. And so all the owners not only end up paying either for when you don't file the claim or whatever else happens, but then when you get the renewal bill, if you got into an accident, your individual insurance would go up. Maybe the pool of risk would change and other people's, through the butterfly effect would go up. But in a condo, literally, you're changing the rate that everyone else helps pay for when you incur losses. And it is a really, I don't know any other place in the insurance world where this exists like it does. So it's very challenging.
Steve, I think Eric had a question.
Yeah, I wanted to actually touch upon two other topics here. One that was brought up by, it was Mark DiPaolo, about what role does the OIC play in monitoring or controlling what reinsurers charge for earth movement coverage. We're finding in our condos that a huge chunk of the premiums we pay each year are either for earthquake coverage or earth movement coverage. And my sense is that there probably is little in the way of control of what the reinsurance market charges coming from the OIC. So I was wondering if I'm correct or I'm mistaken. I was wondering what role your office does play in trying to monitor or manage the reinsurance market.
Well, I'll turn that over to Charles or Rory. I know that we license them, but in terms of monitoring them, we monitor when we get a complaint, and we look at, we see what we can do to assist in complaints. But in terms, Charles, in terms of the reinsurance market, and I know it was a hard market, but it's stabilizing now, and I'm not aware of this. The issue that Eric just brought up, I've not heard that before.
Yeah, we've had just in the last few years, we've had big increases in what we're being charged for earth movement, higher limits. I meant, like you were saying, I was anticipating that things will settle down now. We were in go back about 5 years, it was a pretty soft market. And we actually even upped the coverage we have on my building. And then in the last few years, the premiums were just really rocked up.
Yeah, we play a role in regulating reinsurers, but it's a limited role. Part of the role, part of what we do, it's primarily financial focused. So we monitor the agreements that the primary insurers enter into with the reinsurers, and make sure that those agreements are fair, but more importantly, make sure that the companies, the insurers, the primary insurers, remain what's the word for it? Solvent. Yeah, solvent and stable. Sometimes, what that means though is when we're dealing with a tough insurance market, the rates are going to go up, and sometimes that's beyond our control. But we do monitor those things, those agreements. They have to file the agreements with us. The primary insurers have to file their agreements that they have with the reinsurers. Some of the reinsurers that they engage in business with are offshore. We have no jurisdiction over those.
Right.
I don't know if you've followed, but Bermuda has become one of the main places that a lot of the reinsurers operate because it's beyond our reach, and they have more leeway to do business. So that's one of the problems that we have. And
right.
We have a minimal role, but we do play a role.
Okay, thank you. And then the second thing deals with, I guess, covering the obligations under the master policy deductible when there's a multiple unit loss. We've had occasion in our building, we have some insurers that say we will pay whatever sums the HOA says you are obligated to pay. And then other insurers get really sticky and reluctant, saying, I'm only going to pay for the damage to my insured's unit. I will only pay for damage to other units if your declarations explicitly say that that the responsible party is obligated to pay it. We've gone through our declarations and amended them twice, and we still get arguments from insurers saying that doesn't clearly obligate my insured to pay this extra damage. And so, for example, you have a water loss. It damages 2 units. There's a source unit and another called victim unit. we have a $50,000 master policy deductible. The damage in both units is $30,000. We would say the source unit owner is responsible for the full $50,000 deductible. We've had occasion where their insurance company will say, we're only paying 30. Your declarations are not clear, do not clearly obligate my insured to pay these extra funds. What I'm wondering about, and maybe, I don't know who could speak to this, maybe Steve or maybe you, Commissioner, is whether or not there's any aspect of the revised Code of Washington that's being modified that can sort of keep insurance companies from arguing this point and squirming out of paying coverage. The last thing I'll say is we've had one insurance company, it's the same one, and 4 times they've tried to do this. Twice their insured has basically hired an attorney and gone back after them. And we figured that if they didn't cave, that eventually there'd be a complaint filed with the OIC. But in both cases, the claims adjuster finally flipped over and they paid for the whole loss. But again, I'm wondering if anything in the RCW is being modified so the insurers can't slip through this anymore.
Rory, you would probably know that's a legislative question.
Yeah, I'm not aware, Commissioner and Eric, of any proposals or recent action along those lines. I will just say right off the bat that if there are, whether they're active or, well, yeah, if you do have complaints, please do reach out to the OIC and file a complaint. It helps us get a perspective on what's going on out in the world.
Yeah.
And, our consumer advocates have the ability to connect with insurers and can provide a variety of services and education.
One thing we've advised the owners in our building to do is when they speak to their insurance brokers is describe this type of situation and let the broker know, I want an insurer who will cover me if I cause a multi-unit loss. And we've had a couple times, again, a couple where the insurance company caved and a couple where the owner said, oh, heck with it, I'll pay it myself. And so, you had a loss and they're writing checks for 25 grand themselves because their insurance company won't cover the loss in another unit.
Yeah, Eric, I'm going to just emphasize what Rory said. File a complaint. I don't care where, at the beginning, if you're not getting, sufficient service from your insurance company, file a complaint with us. If we can assist, we will. That is our job. We are the consumer advocate, right? We can't help you if we don't know about it. So that's A. B, legislatively, I will say, I had a bill that did not pass, and I suspect that there will be more discussion about this going forward. But to have these contracts in plain language, right? Because a lot of times what you're talking about when you have a denial of coverage is you're talking about what I call a creative interpretation of an exclusion, right? And they can do that because there's built-in ambiguity in the language, right? And that's how they wiggle around it. They didn't like my bill. They didn't want to have to put their contracts in plain language. But I think that's a conversation that needs to continue and that the legislature should be thinking about. That and there was one other, I'm drawing a blank on it, but I'm going to be meeting with a couple professors about this issue, about what's the best approach in terms of making sure that consumers are aware of what they're buying, right? What they know what they're getting. So there's no surprises when you file a complaint and then you have your insurance company say, yeah, you got coverage for water damage, just not that kind of water damage, right? It's a different kind of water damage that you have to have. So I'd like to see an end to that. There's been a lack of transparency in the insurance industry for a very, very long time. And, I have been going around the state I did before I was sworn in, and I'm still doing it, talking to people about this very issue, that we need to have more transparency in the insurance industry so people know what they're buying and they know what they're getting. We also need to make sure that they're held accountable for the price increases. And that's where our actuarial staff comes into play, because I know there's this perception that our office can approve the rates or deny the rates. That's not true. We must approve the rates if they are not excessive, if they are not inadequate, and if they are not unfairly discriminatory. We are required by the statute then to approve those rates. And so we have to make sure, though, that they're not trying to recoup their losses in other states, like in Florida, where they're having, hurricanes, and Louisiana and North Carolina, and, in California with the wildfires. We've had our wildfires, but we're not anywhere near those states in terms of coverage availability and affordability, quite frankly. That doesn't make anyone on this call feel any better, because it's still hard enough here, right? But that's what I'm saying in terms of what we need to make sure that they stay solvent. That's a primary function of what we do, because if they become insolvent, that means consumers around the state will lose out.
Hey, Linda, we're a little bit over time, I think.
Sorry, but this is really a great discussion dialogue. We do really appreciate the time for the OIC and Commissioner. This was really helpful. I think, Rory, you put in the link for how to file a complaint in the chat. Is that right?
And I'll just add quickly that insurers must respond to any complaints that OIC staff pass along to them. So that can result in any number of things, but
that's real. Yeah, we will definitely use that. We're all very good with that.
Oh,
but
and
go
if
ahead.
I could leave you with one final thing, which I passed on to David, and Rory, I didn't realize I met you last year with Senator Orwell at the ATG. Yeah, but the last thing I would pass on, Commissioner, which I think your office does have direct control over, and which I would beseech you to consider applying some more resources toward the materials that you have. And I did engage with some of your staff, and they passed it on to your IT team that works with, you couldn't even find, when you typed in Condo, it didn't even bring up all the relevant, but there's 2 or 3 documents that didn't even find them. So they did some re-indexing and fixed that. But there are some material changes I would offer that could be provided to enhance the materials, to make them to help people understand HO6 and master insurance and what you should carry, and thinking about things, as Eric has mentioned and other people have mentioned. I think in the absence or not of doing these legislative things and other changes, rulemaking, certainly that educational resource material just doesn't feel like it's really all that robust right now. I've read it dutifully. And we would love, certainly, if there was some resource availability on your team to make some enhancements there to really, address this.
Yeah, send us your suggestions, Steve. I mean, we did update the website just recently, but I don't claim that it's 100% perfect. So if there's more information, and I do view consumer outreach and education one of our primary functions. So I want the website to be as useful and as helpful to consumers as possible. So we're working on some other changes right now as well, that because when you do a website redesign, it doesn't all happen at one time, right? It's in phases. So we are still in the process of doing that, but would love to hear your suggestions. Please send them out. David's probably the best person to connect with on that, but we'll make sure it gets to the right folks in our web design team and go from there.
Okay. Well, again, thank you so much, Commissioner, and the OIC team. We do appreciate it. We would love to have you back on again to join this group again, maybe early next year.
Yeah, maybe I'll join the board by then.
Especially after we've gotten all our renewals.
Yeah, right.
I know, believe me, I'm feeling it too. So, but I appreciate this. It's timely, it's important, and I'm hearing it more and more. So we're on it.
Thank you.
All right.
Thank you.
Thank you very much.
Thank you.
Okay. Is everyone still with us? I think so. Feedback, any comments, questions? I thought it was a good session. Or Steve, we could probably not record anymore, right?
Yeah, we can turn that off
Yeah,
if
turned it
folks
off.
want. Do you want to keep the AI transcription on or
Sure,
not?
sure, sure. Why not?
I felt that in the conversation, we